Before we get started today, just please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay? Alright, so let us get started and straight into what we have on our calendar for this particular week. Now, last week we saw, and when we get to the charts, we'll have a greater look at it. But the biggest event that happened last week, or the biggest market moving event, was the ECB. Basically, they cut their interest rates, and on top of that, they announced an extension to their QE program. Now, surprisingly, the biggest surprise of the whole event was not so much the movement, but the direction of the movement. So you would think, say, the Euro USD, I think, rallied nearly 360 odd pips. Essentially, if you think about what they did was reduce interest rates, which makes the currency less attractive. Okay, and they basically said that we're going to continue on our quantitative easing program, which means they're going to be buying bonds. In other words, they're going to be flooding the market with more euros and, in essence, weakening the euro. So the biggest question is, why did it go the other way? Okay, where everything about this announcement said that we should have seen euro weakness, but we've got euro strength. Now, this is a very, very interesting one, and it's puzzled a lot of analysts, and I've been looking and reading and hearing a whole bunch of things. Even Mr. Mario Draghi himself came out and said the market has got this all wrong and they've misinterpreted our intentions and it's reacted incorrectly. Okay. Now, unfortunately, for sometimes for trading, if you're in the right side of that trade, it's fantastic and you don't really mind. The fundamentals of what's actually happened was that we're still in the same, I guess, frame of mind. The euro still has a strong desire and a strong need to weaken the euro. They're concerned about inflation. Okay, and Mr. Draghi has sent out a clear message that they will address the issue should it not rectify. Now, what is the rectification level? Some people are talking if we get to 110 on the euro, there could be some policy, the policymakers will start to interfere with the market. In ideal world, what they did last Thursday and where the euro was at, we should be sitting at 105 right now. Now we're not sitting at 105, we're sitting at 108 something, and we spiked right up there as well. So we need to keep a closer look on that and see where this basically takes us. All right. So from a fundamental point of view, the euro should not have done what it did. I've been asked a lot of people have asked me why did it happen. Look, maybe the market was expecting more easing than the amount that they got, or I think it's one of those things that sometimes we just cannot explain. Okay, and even for the ECB president to come out and say exactly the same thing, it basically puts a very weird spin on it all. All right, now that's happened. I just wanted to talk about that because a lot of people asked me, and I said that I would address it. Okay, in terms of the other major thing that happened last week was non-farm payrolls came in at 211,000, the job number against the 199 or 200 that they were expecting. So the number came in strong. Everything was strong, which almost basically sets up the green light for an interest rate decision, a rate increase. Sorry, should I say. Now that of course happens next week. Well, if they decide to raise them, we will find that out next week when the FOMC meeting takes place. Now, one thing that we should really talk about this rate increase has pretty much been already factored well into the market. Okay, we're seeing against currencies like the US yen that we're struggling to break the 124 against the euro, which I've already mentioned. So these rates, probably 80 to 90% of it has been factored into the market. What may surprise is the increase amount. So if they were to come out and say we're going to increase by 60 basis points or 70 basis points, that would shock the market, and then yes, we would see massive dollar strength. Now if they come in and they just give us a standard, say 25 basis points raise, pretty much everybody's kind of expecting that, so I'm sure we'll see some movement and commotion, but the market is largely already factored that in. So how do we trade such a highly anticipated number? We've been anticipating this since March this year. Essentially, the key things to look at is that depending on the amount that they raise, if they raise next week, okay, then the follow-ups and the frequency of the follow-up raises will come into play. So if they start the ball rolling, say next week, and we go up, say a quarter of 25 basis points, and then we could see 50 basis points or up to 70 basis points by March next year, that will really change the momentum, start that big US dollar trend strength. Okay, so those are the things that we need to consider. In terms of the data that we have coming up for us this week, I guess the biggest one is we have Kiwi data, which is their interest rate decision. Now, there is an expectation that they could cut rates again. All right, and the conference and the statement that comes along with it will have a key effect on this. Okay, so we have that. We also have the GBP with their rates decision. Nobody really expects them to move it up so much. So this one's probably more predictable than the Kiwi one. In terms of for ourselves on the Aussie dollar front, we have China trade balance tomorrow. What else do we have? Let me have a quick look. We have our unemployment numbers to come out on Thursday, and also the China production number in the wee hours just before the market closes on Saturday morning. I believe on the US side we have a little bit, not too much. Pretty much if everything just comes in there or thereabouts for the US, really they've got no more excuses left. It would be almost a shock if they don't raise the rates. That's what everybody in the finance world is thinking at this particular point. So we're kind of expecting that to happen. I believe that the currency that's probably going to move the most based on pure data release is probably going to be the Kiwi, okay, Kiwi dollar, because there's still a little bit of sort of invariances in there that may cause it to get a little bit jumpy if they do drop rates and by the amount. So look, in an ideal world it should be coming off, but it's not, so let's wait and see what happens. Okay, let me bring up my trading charts and we shall get started. As always, if you have any questions, please type your question in and I'll do my best to address that for you. Okay, all right, so let's start off with the Aussie dollar. All right, the pattern that I've been tracking, now the first thing I wanted to talk about is how to adjust your lines. Let me zoom in a little bit more. I can't, the pattern leaves my screen. This top line, I had it originally around about there. And if I zoom in now, you could argue that I've had a little bit of a break out of it. It's not a clean break. It's not a bullish candle like the ones that I'm expecting. So because it's not, and then I've left with the next candle with these long wicks around it. What you have to be able to do is adapt when you're doing a little bit of pattern trading. So what I've done is I've grabbed the line, I've just squeezed it a little tiny bit higher, and I'm still happy with the positioning of it. Okay, I still really do have my touches there. I haven't sort of ignored them. So I've readjusted it, and let's zoom in on it now. And what I'm interested in now, particularly if we do get this US dollar strength that everybody is kind of crying out for and waiting, I'm very interested to see if I get an inside candle here. Now notice notice these candles, 1, 2, and 3. Can anybody spot something familiar with those 3 candles that I've just pointed out? Let's ignore this one for the time being. I'm just looking at this one, 1, 2, and 3. Okay, that's correct. All 3 of those candles is getting bigger. This one had limits there. This one got bigger on both sides and on both sides. Usually what happens, what we prefer is we prefer a trading range to get narrower. Okay, so we want it to get tighter. This trading range over the previous 3 days has been getting wider. Okay, so usually a widening trading range signifies confusion, signifies we're not sure which direction is going to prevail. Okay, so what I'm interested in now is one is I'm on that top of that um, line that we've drawn in from this converging triangle. Now, I did say a couple of weeks ago when we were over here, I said, let's wait for it to come up to us and let's see if we can execute a trade. Now, I also said, because I'm in the middle, I'm not going to trade my way up there because I don't know if it's going to get there. And likewise, if we had gone down here, I would have quite happily tried to trade any breaking candle down the bottom. Okay. Nevertheless, it has come up to where the level that I'm interested in. So what I've now noticed is a widening range at this perimeter. So what I'd like to see is I'd like to see a inside candle, preferably a red one. Okay, preferably a red one. This would put up a fractal for me on that candle, and then tomorrow when the market opens, if I do have an inside candle, let's say it has a little bit of a wick, give it a wick for example, and we open here, I'll place a pending order to break the inside candle and try and trade my way back down of this converging triangle. Okay, so does everybody understand what we're trying to achieve here? And this would be a counter trend trade, and we'll try and trade our way back down off the geometric pattern that we've basically seen based off price action on an inside candle. Okay, so we're still too early. We don't know if we're actually going to get that. So I need at 9 a.m. tomorrow, my local time. My local time, of course, is Australian Eastern Standard Daylight Savings Time. I will find out whether this candle does in fact form what we're looking for, and if it does, we'll place our pending order in an attempt to break down. Okay, so I'll send the message out tomorrow in the morning once I see what this candle looks like, whether or not we have the setup. Now, what could happen, of course, this candle could now turn into a big blue candle like that, for example. Let's give it a little bit of a wick. I'll color it in a little bit. Okay, so we get this big blue candle like that, clearing this high here, and it's nice and bullish. What would that signal for us, guys? It would signal a buy, a go long decision. Okay, great. So that's why I want to wait. If I jump this trade right now, we could get that break up and the Aussie could continue to go up. So I need to wait for this candle. I will know tomorrow morning and we should be set to hopefully have an inside candle ready to trade, or we'll find out in the morning. Okay, so that's our plan on the Aussie dollar tomorrow 9 a.m. Euro USD. Okay, here it is. Let's talk about it. Here it is. How big was it? 458 pip candle. Okay, so and that movement happened more or less inside 15 minutes, or let me have a look actually. It happened in a 2 hour period. Okay, most of it happened in a 2 hour period. Okay, so what we need to do when this happens, first of all, it really spoils a chart for me. You can see that now I really don't have anything. fundamentally, we should be pulling down, okay? But I'm not willing to trade it based off that. If anybody really, really wanted to, okay, and this would be a purely fundamental trade, okay? This would not be a technical trade, but we would apply a technical exit to the trade. Okay, so do you know what I mean? So what I'm trying to say is you fundamentally, which the Euro USD fundamentally should be going down because what we've had is, let's talk about this, the Euro USD. Okay, the Euro last Thursday said we're cutting our interest rates and we're going to print more money. So that should have sent the Euro on its own down. At the same time, non-farm payroll numbers came in strong, virtually confirming an interest rate increase decision, which should have sent that one up. The combination should have skyrocketed this one down. It didn't do it. Okay, it didn't happen. So, do we want to take a fundamental trade on this? Okay, now, so if I'm going to trade this fundamentally, I'll trade it fundamentally. However, I'm going to exit the trade technically. All right, so what I mean by that is I'm going to get into it because of the reasoning that I just explained, but I'm going to get out of the trade based on my technical trading. And for me, technically, I should get out of this trade at that fractal. If I was to jump in short, but it goes up and hits that, well then I'm jumping out and the trade's over. Okay, so let me ask the room, and there's quite a few of us today. There's 23, 5, there's about 35 in the room right now. Can everybody give me an opinion? If you don't know, I want you to type in a question mark. Okay, so yes for let's short this fundamentally, no for no, and question mark if you have no idea. Okay, everybody, go for it. And based on what the overall room says, I will take the trade. Okay, I got a few question marks. Funny enough, all I'm getting is question marks and yes. Oh, I got two no's. All right, let's measure the risk. Let's size it up. Give me a second. We're talking about 127 pips. How about we'll we'll take the trade, but I usually risk about 100 on each trade. I'll risk 50, so I'll go half the risk. Okay, and I'm still going to try and get out if I get to my one-to-one point. Okay, are we happy with that? What do we think? Okay, everybody seems to be happy with that. So I'm going to make my stop 130 pips. Let me get my calculator. It means I've got to trade at about 38 cents per pip, but it's US. So I'm going to trade I'm going to trade at 30 cents per pip. Sorry, 30 US cents per pip, which is roughly the risk that I want to take. So my volume is my volume should be 0.03, which puts me at 30 US cents per pip. It's going to be roughly approximately 50 bucks, 50 AUD. Okay. All right. So here I go. Let me do it. Let's get in the trade first of all. Let me just double check the account I'm in. Yes. 0.03. I'm just going to place any stop for now, 109, and I'll adjust it in one moment. I'll place any. Okay, sell. Okay, we're in. Let me zoom in and adjust that stop. I said 130 pips. Just going to push it up a little bit. Okay, and my target, I'm going to do this visually. Now remember you can take action at your one-to-one point. There's my one-to-one point there, but I'll push it out to 132.60. Give me one. There we go. Is everybody clear on that? So what I've done is I've shorted the US dollar based off a fundamental reason, not a technical. So this has got nothing to do with the chart. I put my stop based on a technical spot, okay? And I've risked that much and I'm targeting twice that much. Okay, so we should all be, I'll just give you the numbers that I got, just if you wanted to double check off me. Okay, I'm in at 108.60. My stop is 109.89.4, and my target is 106.18.5. Okay, all right, so that's our plan. And when I finish the class, I'll make sure that I add in my one-to-one point so that I can auto exit out. Okay. All right. So, by the way, for anybody, if you took the trade the like I have now, because I've taken a 0.03 trade, I can't close half. I'm only going to have to be able to close either a third or two-thirds. Okay. All right. Let's move on. GBP USD. All right, GBP USD. There's the falling wedge that we have been tracking. We were lucky to take that one. Over here, we were not able to pick up a trade. We said, let's wait for it to come down to us. It did and shot up straight away. It didn't really give us a trade. This is a body engulfing candle pattern right there, but unfortunately, you would enter the trade here and it doesn't give you enough space to take your trade, so we have not taken that. All I can say now is let's wait for it to come back up there and let's see if I can shoot down another one. Okay. Now, bear in mind, all right, that it is a falling wedge. So keep your eye out. Don't just look for the falling trade back down. Also look for the break up. All right. So in other words, look for the big candle and then shoot it off in that direction as well. It is a falling wedge, so this is a good trade. All right, should it occur for us. All right, so right now the pattern is quite good. We got lots of touches, good confirmations. Unfortunately, we were not able to pick up a trade here. That's just bad luck. Um, Now, one of the questions that I get asked a lot is, why can't we just put pending orders here, Christian, and just shoot it so you don't have to wait for the candle pattern? And you know what? Sometimes you can do that and you get away with it, okay? However, sometimes you do that and then basically it's a big bear breaking candle and it just goes right away from you. Okay, so I prefer to wait for the candles to confirm my movement. I believe that there's enough room in there for me to play, so I'm quite happy for that. All right, now there is another trade right here if anybody is interested in it. Can anybody see it? It's based off last week's class, well, actually Friday. Can anybody see the trade? What have we got? No one? We can't see it? All right, I'll help you out. Okay, one person's got it. Yes, Ray. Okay, two. So we got an inside candle, but the inside candle by itself is not really a good enough reason. However, if I was to change my profile and put on the profile that we did on Friday, Okay, let me find it. Give me 1 second. Okay, remember how we defined trend on Friday? Changed my profile. From this point here, we are in downtrend. Okay, the two moving averages, that's my 24 and this is my 12. This is basically from Friday's class. We are in downtrend because this is where the two moving averages have crossed over each other. So in theory, what we're looking for, we're looking at every time we get a fractal. We've got it right now. Okay, so really we can place a break, a pending order at the break of the inside candles. There's the candle. We've had the pullback. There's the candle with the fractal. There's the inside candle right next to it. Can everybody see the trade right now? Yes? Sometimes when depending what style of trading you're doing. So if I strictly only showed you this profile right here, okay, we would kind of say, yeah, look, we're kind of falling down. We're in trend. And by the way that we defined it on Friday, we're definitely in trend, and it's pulled back to that nice little region in here that I spoke about. So this would be a bread and butter trade that you would take if you're trading this method. All right. Now, because I have a different profile on my chart, we're getting slightly thrown off course. Even with this profile that I got on right now, where I'm looking at a 50 simple moving average, we can clearly see that we're kind of staying underneath and we're in downtrend. Okay, so let's put it to a vote. Who wants to take this trade? This is a pure technical trade. Okay, even if I add in the wedge, I've lost my cursor. Where is it? Even if I add this guy in, have I got room? The important question is, have I got room to be able to take my profit? Okay, do I have room to be able to take my profit? Let's have a look at that. I would have to start the trade here. My stop would be there. So that's my one. I think I've got enough room even to here to get to my 1-to-1 point. And there's a bit more room which will get me maybe not quite 2-to-1, but it'll get me very close. Do we all agree with that? Yeah? Okay. So we're trading inside of a falling wedge. The other thing that you need to take into account as well is we may not even get triggered in this trade, because if this now turns around and starts to shoot up, well then that's it. The trade is not going to happen, and then we're going to wait and we're going to look for a trade over here or a trade over there. All right. So I think when you're trading this particular method, which we're doing on Mondays, we're doing trend trading and pattern trading. Okay, we've got to look at all the possibilities. All right, I think that this looks to be like a legitimate trade. So what I'm going to do is I'm going to place the pending order. Okay, and I'll take a proper risk trade. So let me just get my levels. Give me one moment. I'll put you on mute for a second while I get my levels. Okay, I'm going to take the trade at the break of 50.70 at 50.75. Okay, and my stop's going to be 51.93. Let me just work out how much pips that is. 1 second. It's 118 pips, which means I want to trade at about 84 cents a pip. So I'm going to take a trade at 70 cents. At 70 US cents, so 0.7. Okay, here we go. So 0.7 is my volume. My entry I said was 50.75.0. I'm going to place my stop at 51.93 and I'm going to place a target 49.30 just to start me off, and then I'll adjust it if I have to. Let's hit it. Does it look correct? There's the break of the bottom candle. Oops, that stop is a bit high, so let's make an adjustment. I could have taken a bigger trade actually, but doesn't matter. I'll just leave it at that. And that looks about correct to me. Are we all in? Do we all agree with that? And let me get officially what I actually did. So I'm got a pending order at the break of 50.75. My stop is 51.66, and my target is 49.30. Okay. Now don't forget, if we push forward and break that top, come back and cancel your order out. Okay. Don't forget that. Okay, so GBP USD, we're set. Let's see if we get triggered. Gold. Okay, gold reacted correctly. We got strong non-farm payrolls, which no, sorry, wrong. Gold was mixed up in the euphoria. We should have had a drop because higher interest rates basically makes commodities less appealing. But it didn't, and we've rallied to the 108.4 level. These charts right now don't really look any good at all. Give me one moment, see if I can find something. There's nothing in this one, guys, so I'm just going to leave it. Gold's just a little bit too jumpy for my liking right now, so let's just move on. Okay, US yen. Okay, US yen is still trading inside this little congestion. We're struggling to break through that level and into the 124 and push on to the next level, but it's also holding, so it's not falling either. So it may just well take the initiative and finally a rate decision to break us out of there, but we should be attentive. Okay, we should be attentive. Now this range is quite small. It's about 140 pips, so it's not a massive range. So I don't think there's enough to try and look for inside candles or to trade back down because the range is too little. So what we really want to be looking for in this scenario is we want that big bull candle. If, like, for example, today's candle ends up looking like that, that's the one that we want, and then we can hit the trade moving forward. Okay, so right now as we sit, we're close to a setup, but we don't actually have a setup as yet. Okay, even though, Give me 1 second. I just saw something. No, there's nothing there. I can see an inside candle here in that setup there. However, there's just too much congestion, so I don't really want to trade the break forward from there. I would rather wait for the congestion to be broken completely before I get interested in this trade. All right, so I need to wait and see how the next set of candles turn out, and let's see if we get that break out of it. Question, Hamid, the fundamentals should come up. I don't understand your question exactly, Hamid. If you could just retype it for me, and I'll come back to it. Okay, let's move on. I think you were referring to gold. Is that correct? Oh, the US yen. Okay. So fundamentally, the US yen, it should go up. Now, we need a little bit more confirmation. We need the Fed Reserve next week to raise interest rates, and if they do raise their interest rates, it should come up. Okay, that's what we're looking for. All right. Okay, Euro yen. Again, this is a euro-based trade. We had a big movement. The euro had the big rally. It basically spoiled every chart that we had. So I'm not really looking at anything right now with this one. The chart just looks way out of sync. So I'm just going to have to leave it alone. Okay, let's move on. Kiwi dollar. Okay, Kiwi dollar is, I noticed this ascending with this channel that just started, and we can really only just confirm it from here. We've got the two touches down the bottom, we've got the two at the top. We're right in the middle of the channel right now. So if we were looking to do a trade purely based on the channel, well then we can't, not yet. We have to wait till we get to one of the, either the top or come back down. There This is a trade. The Kiwi dollar is going to be one that this particular week, because it is the one that I feel is going to be the most volatile. We've got the RBNZ rate decision to come out. We also got a bit of US data, and all on the prelude of the rate rise, whether yes or no. This one's going to be a tricky one to trade. All right. Right now, because we're right in the middle of or not quite in the middle, but we're in the zone of that channel. I just need to wait and see how it plays out. What wouldn't surprise me at all is if this all of a sudden just turns around and we get a nice candle like that, and then I'd be really happy to just jump all over that. All right. So, but it hasn't happened yet either. So we need to wait for that, for any kind of confirmation. So at this particular point, based on the chart that we're looking at right now, Kiwi dollar, we just wait and see. What we may get an opportunity, if we get a little bit more rallies or something like that, we may be able to do like an inside candle, because there's quite a few of them forming here. So you got, first of all, here you got an engulfing candle, which we may have thought we could have taken a trade there if we were in an uptrend, but the trend is just about to start. So keep an eye on this one with the other profile. You might get an opportunity to take a trade towards the top side of the channel. All right, but right now there is nothing there. So let's move on. Let's have a look at our last one, which is the Euro Aussie. Oh, Euro Aussie. That big Euro candle spoil territory. We're in a nice downtrend. Like in theory, we're in a nice downtrend. And you got an inside candle over here. Taking the break trade there, it's a technically correct trade to take. All right, but we're already in on it on the euro. So there's too much correlation. So I think we leave it alone. Let's have a look, see 4-hour chart if there's anything there. No, nothing there, guys. Yeah, Ray's just made a good point. He's saying that this candle here has got the double fractal. I didn't see that. I wasn't thinking that I was going to trade it in any case because my head was already in the space that I'm in on the euro. But also that's another good reason as well. Thanks, Ray. So candle with a double fractal usually means it's broken up and down. Okay, it's got a higher high and a lower low than the previous candle. That's usually what it means. So it's a candle where the trading range got wider, which is a candle which signifies confusion in the market. Okay, we don't know which way we're heading. So generally, I don't like to trade off the double fractal candle. All right. So there you have it. Does anybody, I'll recap what we've done. Does anybody want me to have a look at something? I've got a bit of time. Let me know. Let me go back and I'll recap while I'll allow you to type in any questions that you might have. Aussie dollar. We're still following this converging triangle. We've had to modify it a little bit, but we're still happy with it. We've got an inside candle situation setting up. Let's wait till tomorrow morning and see if we can pull off a trade. It's the first one. Euro USD, we have taken a fundamental based trade. So this candle here, Ray, as well, has got the double fractal, but remember, the reason for my trade here is not on my technicals. I'm only in this trade based on the fundamentals. Okay, so that's why, and that's why I put it out to a vote for everybody. We all agreed that we wanted to participate, and I've risked half the usual amount. All right, so there we are. So we're in there. Let me give you the levels. So got in at 108.68. Stop at 109.89. Stop at 106.18. Sorry, the target's 106.18 and the stop is 109.89. We're sellers. Okay, there's the numbers right there. GBP USD based off last Friday's class. We're taking an inside candle within a trend on a pullback where the markets come pulling back, giving us the setup that we want, and we're trying to get in. We're not in the market yet, but we are approaching our entry. We've got a pending order trying to get in at 150.75. Stop loss 151.66. Target 149.30. Okay, GBP USD. Gold, we were doing nothing. US yen, we're waiting to see if we break out of this little congested zone that we're trading at. Euro yen, the charts look awful. Kiwi dollar, we've spotted a brand new channel. Let's see what happens. We're in the middle, so we're not willing to do anything right now. Euro Aussie. If we took this one, it would be too much of a correlating trade to the Euro USD. The charts look very, very similar, so we are sitting on the sidelines. Any final questions for today, guys? No, we're all good. We will continue this week back to our usual Thursday at 3:30, okay? And we will continue with price action in counter trend situations, okay? So if you like trading off your candles, make sure you come on Thursday. Let's see what we have. Keep an eye out for your Twitter alerts just to see how we go with the Aussie tomorrow and anything that pops up during the week. Other than that, have a good trading week. Remember, Kiwi dollar is the volatile one, so take appropriate action. I'll see you all on Thursday at 3:30. Bye for now.